I want to share a secret strategy with you, a strategy used by some of the most famous business people you may have heard of, like Walt Disney, Ray Kroc, who started McDonald's, J.C. Penney, and Doris Christopher of The Pampered Chef. It's a strategy that millions of Americans use every day. It's one of the oldest and strongest industries in the country, dating back over 100 years, and it is a trillion-dollar industry. And in the next 6 minutes, I'm going to share with you how this strategy can help you to stop paying excessive interest to banks and credit card companies, how to set up your own private banking system, a neat strategy to recapture almost every penny of major purchases like cars and vacations, how to grow your money safely and securely with guarantees, and how to access your money and have it grow as if it has never been touched. Look, we all know banks and the credit card companies make a fortune. In fact, in 2007, Bank of America's Kenneth D. Lewis made $24.8 million, Citigroup CFO $19 million, Goldman Sachs CEO $70 million, Goldman Sachs CFO $71.5 million in annual compensation, and JP Morgan Chase CEO made $27.8 million. Now, what do all of these banks have in common? They were all bailed out by taxpayer money. Add to that the fact that the average American is paying up to 34% of their entire after-tax income in interest, between 15 to 20% on car loans and 80 to 90% on home loans. Even though you think you may be getting a low rate, when you add up all the interest that you've paid, it is truly astounding. In fact, mortgages are designed to keep you indebted. As you look at how much of your money is going to principal for the first 5 or 10 years, almost none of it goes to principal. Almost all of it goes straight to interest. And then when you refinance, the whole process starts again. So wouldn't you like to stop making the bankers rich and recapture some of that money back into your own nest egg? Truly, banking is a great business if you're on the right side of the equation. So why not set up a way to become your own source of financing and continue to earn interest on your money? Pay for major purchases like cars, vacations, and stop paying banks and credit card companies while still having your money grow safely and securely. Plus, while you're using your money, it continues to grow as though you've never touched it. The way to do this is called financing yourself to wealth. And I'm going to explain that in this short video. But first, let me introduce myself. My name is Brett Kitchen. I'm the founder of TrueFinancialAge.com, author of The Financial Fountain of Youth, and I've been featured in publications like CBSMoneyWatch.com, American Chronicle, the Salt Lake Tribune, and been on radio shows from Texas to New Jersey. Now, let me show you how financing yourself to wealth can work with a simple example of a $20,000 vehicle purchase. In a conventional situation, you would go and get a loan for, say, 48 months at a 6% rate. Your monthly payment would be $490, and at the end of 4 years, you'd have a car. The bank has your $20,000 plus the $2,500 in interest that you've paid, and if you want to buy another car, you have to go borrow again. If you were to pay cash, you would save up $20,000, go pay cash for your car, and after 4 years, you'd have a car. The car company has your cash, and you'd have to save again for another car. With a 101 plan, you could fund a plan over time or in a lump sum, and your money grows at a guaranteed rate much better than an average savings account or CD and is never at risk in the market. When you're ready to buy your car, you borrow from your 101 plan, but the $20,000 stays there and continues to earn interest. You'd pay your plan back the $490 monthly payment for 48 months, and at the end of 4 years, you'd have a car, you'd have the $20,000 back into your account, and you'd have earned interest on that entire $20,000 for the past 4 years. Remember, your money continued to grow even though you used it for your car as if you'd never touched it. And your company continues to pay you interest and dividends whether you use the money or not. Here's another neat feature of the 101 plan is that you can structure the amount you want to pay the loan back. If you want to pay back at a higher interest rate, you can actually put more money towards your cash value and grow your nest egg faster. In fact, when you do this, you can increase your nest egg by hundreds of thousands of dollars. Now think about how many cars you buy over the course of your lifetime. Say you buy 5 $30,000 vehicles. That's up to $150,000 you could have recaptured back into your nest egg rather than going into the hands of some bank or car company. The way that we do this is using a 101 plan, which is a modified cash value insurance policy. Now, before you shut down because you hate life insurance, let me tell you, I was one of you. until I learned these secrets of the 101 plan that banks, Wall Street, and gurus don't want us to know. Then I became extremely excited, because these policies actually grow up to 5 times faster with the cash value than traditional life insurance, and your money is safe and secure out of the market. Now, another one of the reasons you may not have heard of this before is that banks and credit card companies don't make money from loans when you use this method. Wall Street and investment houses want you to keep your money with them so they continue to grow rich. But there are some other exciting benefits about this plan. You can grow your money securely with guarantees, eliminate paying banks and credit card companies interest. Your money is in one of the most stable industries in the entire world. You become your own lending source. You get access to your money easily. It's not locked away like in a 401k or other qualified plan. Your money grows tax deferred. You can finance cars, vacations, and major purchases, and your money grows as if it was never touched. Plus, you can grow and withdraw your money without tax. You can use it for college funding or for passive income, and have a tax-free retirement when structured properly under the current IRS tax laws. Plus, you can get a death benefit paid to your heirs income tax-free. Now, you wouldn't be the only one to use this. As I've said, millions of Americans use this every day in their lives. Over 30 years ago, Nelson Nash popularized this concept in his best-selling book, Becoming Your Own Baker. And since then, thousands of Americans have said goodbye to banks and credit card companies while financing themselves to wealth. It's important to realize you don't need a lot of money to get started. Everyday average people are using this method all across the country. You don't need a lot of education. It's a simple process, and anyone can do it. You can start by just financing yourself to wealth with a simple car payment. This is a proven way to save money on interest, save money on taxes, and secure your money so it's not at risk in the market. Now, you may still have questions. I understand we've covered a lot in this short video. So the next step to taking advantage of financing yourself to wealth and getting your questions answered is to get a risk-free, pressure-free 101 plan blueprint. All you have to do is go ahead and request a 101 plan blueprint in the space below. You can get all of your questions answered, and we'll set up a time to chat with a qualified representative who can answer your questions and give you a personalized analysis of how this may be able to help you say goodbye to banks, credit card companies, and risking your money in the market, all while saving money on taxes and growing your money for your future.